And Happy New Year. I'm Yahoo Finance Executive Editor Brian Sozzi. Let's fire up three things you need to know today. First up, New Year, same bullish vibes. After notching double-digit gains in 2025, including 25% surge in the Mag 7, stocks are set to start the year where they left off. Bullish moves higher in silver, gold, and tech stocks. And Wall Street expects the bull run to continue this year after 3 years of back-to-back double-digit gains. The S&P 500 is now up 90% since its October 2022 low. Strategists at Wall Street's biggest banks are forecasting more gains for this year. The average year-end forecast for the benchmark index implies another 9% gain this year. The lowest estimate is over at Stifel, with Barry Bannister predicting the S&P ends the year at 7,000. Meanwhile, the bulls are running over at Oppenheimer. Strategist John Stoltzfus sees the index closing out the year at 8,100. Plus, looking for the next charge in Tesla stock after beating the S&P 500 by 5 percentage points in December. Tesla bulls eye the company's latest delivery numbers due out at some point this morning. Recent research suggests Tesla sales are still under pressure due to the EV market slowdown, so bulls may be in for a rude awakening. All right, let's get a check on the stock futures here. As I mentioned at the top, we're seeing some bullish action right out of the chute here. Those vibes continuing from what was a somewhat strong December. So again, stock futures in the green here. Let's dive into our top stories of the day, which is a little bit of everything, ranging from bull runs and tech stocks to Tesla delivery numbers. Yahoo Finance senior reporter Inez Ferre and our tech editor Dan Halley are here. Dave Mazza, Roundhill Investments Chief Executive Officer, joins me as well. Dave, good morning to you all. First of all, Happy New Year. Dave, let me start with you here. Any surprise to see this momentum in tech stocks out of the gate?
No, not really. Stocks sort of limped into the final trading days of 2025. The Santa Claus rally hasn't necessarily appeared. I think it came kind of a bit early in December. But coming out of the gate in 2026, not much has changed, just as the calendar has changed from 2025 to 2026. I think the investor optimism, particularly around AI, is outweighing the concerns of a bubble or the valuation concerns. If we take a step back, last year's gains in the S&P were actually driven by earnings growth, not really an expansion of the multiple. Multiples were essentially flat year over year. So I think net, not much of a surprise that we're coming out strong in the first trading day of 2026.
I mentioned at the top of the show, Tesla delivery numbers. That is breaking. Those numbers just crossing the wires. Tesla fourth quarter deliveries, 418,227. The estimate was for 440,907. So those estimates, those delivery numbers below estimates here for Tesla. Inez, not good news, but it was foreshadowed.
That's right. It was foreshadowed. I mean, the street was expecting that this wasn't going to be a great quarter for deliveries for Tesla. You had the tax credits that were expiring in September, so that was a pull forward for the third quarter. The fourth quarter was not expected to be great. Also, Tesla has seen quite a bit of weakness when it comes to its deliveries, its cars in Europe as well, declining in that region. So this was somewhat expected by the street. Look, what the street has been sort of pricing in when it comes to Tesla are the robo-taxis and the Optimus robots. I mean, I took a look through the transcript of Elon Musk when he was talking at his shareholder meeting in November. I put it through Gemini and through ChatGPT to see how many mentions of EV were in that. There was one mention. Everything else was a mention of Optimus robots and autonomous. So that is definitely where he sees the vision of this company going and where he's signaled that the company is going. And that's what the street is pricing in when it comes to this stock.
Dave, if one likes tech, do you use weak delivery numbers on Tesla to be a buyer?
Well, it's interesting. I think to the point earlier, Tesla's really never traded off of the reality of sort of where deliveries are and where the earnings growth is. It's almost been a boost to the stock during good times. And what's interesting, we know we were in this EV winter. Numbers were soft. They sort of forecasted that. But Tesla doesn't really trade off of these numbers at this point anymore. Of course, it's surprising to see the stock up after they deliver disappointing numbers, but anything worse than a worst case scenario tends to be supported because right now the multiple is pricing in this robo-taxi rollout and then the future with humanoid robotics and the Optimus.
Dan, good to see you here as well. What is the market driver is Nvidia and CEO Jensen Huang, and we're about a couple days away from him speaking at CES, which I know you'll be there. It's a big speech, and the market will be hinging on it.
Yeah, that's right, Brian. There's going to be a number of high-profile keynotes from some of the biggest chip companies in the world, but obviously Jensen Huang's keynote will be the largest of them all. Last year, they showed off some new gaming chips as well as a new smaller desktop size AI processing unit. They called that Digits at that point. They since released it with various partners. They discussed their push into physical AI, robots. That's just called physical AI for some reason now. Self-driving cars, things along those lines. And so you can expect to hear more of that this year as well. We'll have to see exactly what they announce. Don't expect their high-end chip. Don't expect to hear anything about Vera Rubin or any kind of announcement related to that. That they save for their GTC conference in March. And so this will likely be some of the smaller announcements that they would normally have at other events around the world that they tend to host. But really, I think last year they came in to CES and kind of knocked everyone on their socks, out of their socks rather. And I think that you're going to see the same thing this year. It's going to be the hottest ticket in town. It will be the talk of the strip for the majority of the week. But as I said, AMD will also be there with their own announcements. Intel will be there. Qualcomm will be there. So that the chip makers are going to be kind of running the show there. And it's frankly all going to come down to AI.
And as clearly, sure, we could debate this, but Nvidia is really the straw. I should say it stirs the drink for all things AI.
100%. Nvidia has been the leader when it comes to AI. And if you take a look at the semiconductor space in general for 2025, I mean, it was gangbusters, as Dan was just basically saying. They have been the leaders when it comes to this whole trade. But also, if you look at the top 10 companies of the S&P 500 for last year, at the biggest gainers, I was looking at SanDisk, Western Digital, Micron, Seagate. This is all data, compute, infrastructure, Lam Research. You also had Palantir in there, and you had Robinhood, which was that retail trader for this AI trade. That's the retail trader that's been sort of fueling so much of this and so much enthusiasm about this AI trade. But yes, to your point, Nvidia has been the leader and the one that everyone will be paying attention to.
Dave, if one is getting bored a little bit with the Mag 7, maybe they're a little more cautious on it given the valuations they trade out. Where do they go? Are there under the radar tech names people can play that still get them exposure to AI?
Well, it's interesting. I think the AI trade itself has sort of evolved, right? So the initial push was into the pure picks and shovels, and Nvidia, of course, being the massive winner, continues to be a winner there, of course. But now we're seeing it evolve, right? We just mentioned a moment ago a company like SanDisk. What's now investors are saying is, what memory do we need in order to actually run these large language models sort of in perpetuity? And that's one of the reasons why stocks like Micron, SanDisk, and others have done so well. So I actually think the trade is now evolving, not necessarily into where the most obvious winners are. What the big question mark is sort of what's going to happen in the software space. Names like ServiceNow, Salesforce have sort of been disappointing in their ability to produce return on investment in their AI build out. Which is one of the reasons why a company like Alphabet was really the big winner last year, because they're the triple play when it comes to AI. They have large language models, they're a hyperscaler themselves, and they can deliver that sort of in enterprise and consumer applications. So I think the trade is still on. It's going to be a little bit more volatile because investors are going to start kind of really being more discerning about that spending, just as we saw with disappointments around Oracle's build out, because it's going to be debt funded as opposed to funded from free cash flow. Dan,
Dave brings up a good point on memory pricing. We heard memory pricing has gone through the roof. We heard Micron talk about it. I asked HP's CEO about it too. They've had to raise computer prices. How much of a focus will that be at CES?
I think it's going to be kind of a side conversation to the big announcements, but it's the reality of the situation now in the tech industry. Look, they're raising prices on certain products. If they're not raising prices, there's the potential for them to downgrade some devices and sell them that way so that they don't have to use as much memory. And this is all obviously from the data center build out where the DRAM is being kind of pushed off onto the high bandwidth memory for the data centers, and that kind of leaves all the other uses for DRAM kind of in the wind. And so, I think this is going to be a topic of discussion. It could be a bottleneck for some time for the consumer tech industry and the enterprise tech industry. Don't forget, basically everything that is a computer uses DRAM. And so they're all going to take a hit, all of those types of products. So, whether it's, as you said, HP, Dell, Lenovo, Asus, those computer makers, we could start to see it leak into smartphones. I don't necessarily think Apple would be impacted as much because of their supply chain know-how, but we could start to see it hit there. And then, look, cars also use DRAM. And so that could be a component there that, again, hits the car tech industry for a while.
Dan, you see those pickle glasses that got released? X is really talking about them. They're wild.
I have not seen any pickle glasses. No, I have to look them up, though.
Yeah, they're wild. They're almost like everything you want out of Meta sunglasses, but you never really got, which is really interesting. Fascinating release. I've been watching all the posts out there this morning. Inez, real quick, I want to get back to Tesla before we'll leave it there on the delivery numbers below estimates. It is amazing to see the stock pop on these results.
Yeah, it's amazing to see that. This is, again, the fact that the matter is that investors are betting on Elon Musk. This is why he got the pay package that he got. And they're betting on the future of this company being more of a robotics company, autonomous driving. That's where it's at. So they're not thinking that EVs and their deliveries are what they're looking at. They're looking ahead at the future. And I will say that I think that this year is going to be also very big when it comes to robotics. We are going to hear more and more about this. I've been seeing much more commentary about robots in warehouses, in manufacturing. And this is going to be the story going forward, and then what will happen with the labor market after that. So we'll see. But this is definitely where the future is and where Elon Musk has signaled it, and investors are betting on him.
Indeed they are. Inez, Dan, thanks so much. Dave, you're hanging with me. We'll talk to you in a second. Coming up on Morning Brief, I'll have some top trending tickers on Yahoo Finance and a guide on what stocks could be due for pop in 2026. Now time for some of today's Yahoo Finance trending tickers. We're watching Tesla, Baidu, and furniture stocks. First up, Tesla, the company reporting its fourth quarter deliveries, those coming in at just above 418,000. And Tesla got ahead of it a bit in a surprise move earlier this week. The EV maker laid out expectations based on what analysts were looking for, and that number was lower than Wall Street consensus. The company affected by the end of the EV tax credit, which happened right before the start of the fourth quarter. For the full year of 2025, Tesla delivered roughly 1.65 million vehicles. Next, Baidu. Shares of the Chinese internet company are soaring ahead of the opening bell as it looks to capitalize on the AI chip boom. The company has a chip division and it just filed for an IPO in Hong Kong. There weren't details about the size of the offering, but Jefferies estimates the company's valuation between $16 billion and $23 billion. A lot of money. Finally, furniture stocks, namely Wayfair and RH. Those stocks getting a boost after getting a reprieve from President Trump's tariffs. Trump announcing late Wednesday he will delay the tariff increase on furniture and kitchen cabinets for a year. They were supposed to go into effect on January 1st. The existing 25% tariff on those products remains in place. It's the administration's latest delay in the roller coaster of tariff policies. On many occasions, a levy would be unexpectedly announced, only to be rolled back, and it comes as the administration faces growing voter concerns over prices and affordability. Retail investors today aren't the same ones day trading in their pajamas in a family member's basement using a dial-up internet connection. They have growing influence and are armed with more research and insight than ever before. Consider this, retail ETF inflows last year surpassed the combined total of the previous 5 years. All that said, based on my chats with retail investors, one thing remains very clear. This group still needs help finding fresh ideas. A lot continue to stick to tried and true stocks such as Nvidia and Alphabet, and that is totally okay, but finding new names to invest in is very much an important undertaking. Let's find some of these names. Still with me is Dave Mazza, Roundhill Investments Chief Executive Officer. Dave, hit me with some names that might be able to be purchased by the retail investor, and in some cases, they like those stocks below $100.
Yeah, well, it's interesting. So retail investors actually were the largest source of demand for U.S. equities last year. They're actually forecasted to be the largest source of demand again in 2026, according to JP Morgan analysis. And to your point, if we actually take a step back and see, well, what was retail buying? Of course, they were buying broad-based ETFs, the record numbers that you mentioned a moment ago. But we're actually seeing the retail investor expand from the tried and true names like the Magnificent Seven stocks, your Nvidias and your Teslas and your Alphabet, but now into other areas, right? So there are some kind of what I'll call frontier themes that were of huge interest to retail investors last year. Things like memory. They were early on a company like SanDisk, also quantum computing, nuclear. So I think retail investors are looking for two things. One, sort of the safety or potential safety that companies with huge moats can continue to grow and grow their revenue and earnings consistently with high margins, but also for new ideas that have the potential for outsized performance, which is one of the reasons why I think the retail investor base can no longer be thought of as just someone who's going to be pushing around stock like GME or AMC, or just kind of plowing into broad-based indices. They actually have sort of influence across a diverse range of names and sectors.
Dave, I'm glad you brought up influence because I agree with you. At 5 a.m. this morning, I put a very long post on my LinkedIn account shouting out retail investors. And when I talk to CFOs, head of investor relations, comms pros, all that group, they continue to really discount the influence of retail investors. At one point, do these folks at public companies wake up?
Yeah, I think it's silly to sort of discount the influence of retail investors. We know historically, right? There was a book written about it, a movie called Dumb Money, because for years, everyone said retail was the dumb money. Well, guess what? In 2025, they proved that really wrong. They were some of the first to buy the dip in the March-April period. That really helped. When institutions got significantly scared, pulled back from stocks, retail stepped in to buy, leading to sort of outsized performance in 2025. And I think some companies are now sort of waking up to the component that they should care about their retail shareholder base. A company, of course, like Robinhood is at the forefront of that, almost kind of shifting things around to be retail first. That's going to continue to take some time, though, because the entire industry, investor relations departments, to your point, we're really set up for traditional actively managed mutual fund managers. So professional investors, not the retail investor, but we know that the retail investor is continuing to put money into stocks, and they're probably going to end up, if they have a choice, choosing a company not just that they know and believe in from a sort of a valuation or earnings growth standpoint, but a company that kind of stands with them and is positioned for how they think about doing business.
That's a good point, Dave. How should one, somewhat early in their investing journey, how should one begin the process of finding 5 amazing ideas to invest in?
Yeah, well, I think, many people say it well, right? Whether it's Buffett or others kind of say, the best thing to do, of course, is, take your initial investments, put it into sort of a broad-based index. And that makes a ton of sense because if you're looking for sort of retirement money or things of that nature, you may not have the aptitude or interest to be able to pick individual stocks. But at the same time, we know that the retail investor has matured and people actually want to, again, own individual securities that they believe in and actually believe that they have the potential for outperformance. So I think retail investors, like anyone, needs to do their homework, understand, are we investing just thematically for something that can have the potential for those outsized performance over a long time period, or are you going to be more tactical? And to me, it really comes down to what kind of, not just interest do you have in the market, but the ability to kind of put the time and effort in. And if someone does, and because of the information flow that now we have access to on our smartphones, frictionless trading with really the idea of commissions kind of going to zero, I think that actually empowers retail investors to do their homework and to beat Wall Street if they're so interested in doing so.
Dave, lastly, is there one under the radar ETF that these retail investors can gravitate towards this year? And then if you have a name in mind, what companies are in that ETF?
Yeah, so it's interesting. So we relaunched actually the Roundhill Meme Stock ETF, ticker MEME, for investors and retail investors to be able to say, hey, is this actually, as opposed to picking the one stock that they think has the potential to outperform, let's get a basket of stocks that are really owned and influenced by retail investors. But the name that actually I think is interesting is the ticker OZEM, OZEM. So this is a company, this is an ETF from Roundhill that actually offers exposure to weight loss stocks, so GLP-1 stocks in particular, and sort of the adjacent names there. That's actually had quiet, significant outperformance in the last year, in not just in the AI trade. So I think it's interesting. Retail naturally now has the ability to sort of expand away just from AI and take about breadth in another area like healthcare, which in many ways was a value sector, but actually now has the revenue and earnings growth to have the ability for potential significant longer term outperformance because of the setup.
One of my mentors, Dave, hated cutesy stock symbols. I don't, so I like OZEM, all right? I am not in that camp. I think that's pretty cool. Dave Mazza, Happy New Year. Good to see you. We'll talk to you soon.
Thank you. Happy New Year.
All right, that does it for Morning Brief. I'll be right back on Opening Bid with your 2026 Tech Investing Guide. You're welcome in advance.